Good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond, and it is 5 a.m. Eastern Standard Time on the 6th of February. What we're going to talk about today are obviously the futures. How do we look this morning? And we'll also discuss the economic data that came out yesterday and what that might mean for the markets, certainly what it might mean for yields. And we'll go over some members' stock chart requests. The symbols that we'll be going over today: GDX, Google, Facebook, GDX being the gold miners, Google, Facebook, Shopify. Shopify has a very, very high implied volatility rank, meaning it's probably going to have a directional change fairly soon. And we'll probably look to sell, because I like this chart. I already looked at it. We'll look to sell premium and generate some cash flow on Shopify. So let's get to it. Let's go to. I'm stuck on gold here right now because gold just popped. I'm looking to see whether it holds support, and it appears to be doing so. So we'll come back to this. I want to see if this holds support, because gold has been weak of late. I was not loving the chart yesterday, nor was I loving the chart of the gold miners. We'll revisit them. Let's get to announcement. Sunday evening, being the 9th, I will be again on with TrendSpider. They invited me back to show how I leverage TrendSpider. I'll also be going over, I'm going to try to learn it somewhat, their new scanner, this functionality. It's a really cool tool. I'm just still absorbing it, but I should have a little bit more proficiency by Sunday evening, and I'll try to demonstrate it a little bit. So I will be on with them. I believe it is 6 p.m. Sunday evening. That means that I won't be able to have Sunday Night Futures live. Maybe I'll do a push on that. I'm not quite sure yet. Maybe I'll make it 7 o'clock, and I'll come back to it. But either way, 6 p.m. Eastern Standard Time, TrendSpider, and just enter your email address below, and we'll send you out an alert when we decide to go live with that webinar, because it is an invite-only webinar. Let's get to let's go to the news first. Coronavirus will whack 2% from global GDP growth in Q1. You know, if you're a conspiracy theorist, or if you're skeptical about the coronavirus and its impact on the health of, truly the health of the populace of the globe, I think it's probably overblown. We're seeing headlines die down. Is it still spreading? Yes, but it's certainly not as crazy as what was feared. But the fear certainly did have companies reeling in their expectations for growth, their expectations for spending, and they will probably, I hate to agree with Goldman, but Goldman's probably right here. The fear-mongering is probably going to whack some growth off of global GDP. It's 2% is a lot, but it's going to be something. So this is not good for equities. And equities these past several days, I mean, it's ridiculous how far they've come, considering the fact that year-over-year earnings are down. So, you know, at some point in time, we're going to wake up and we're going to have bright green futures. You know, amateur money, just like they got lured into Tesla. We booked profits on Tesla, the short yesterday. Just like they got lured into Tesla, they're going to get lured into this market, and they're going to see a sell-off like they haven't seen before. So you really need to be very, very deliberate in opening up long positions, allowing the shares of a company, allowing the shares of the market to rally, pull back, Are we seeing higher lows? Are we consolidating nicely and then breaking out? Is this a true market, or is it being manipulated? And I would argue that the charts of the S&P 500, the Russell 2000, they all imply that in all probability we're seeing a manipulated market. So I'm not buying this market right now. It's a show me market, and it's just showing me that it's being manipulated. The economic data yesterday was pretty good. You had ADP, which came out with a huge beat, such a big beat you have to question it. But the expectation was soundly beaten with a result of 291,000 jobs. The key to remember about ADP, we have the government numbers released tomorrow, being Friday, and normally ADP overstates the government numbers. Believe it or not, the government numbers are usually lower than ADP. We'll see if that plays out tomorrow. But all throughout 2019, ADP was consistently above the government's numbers. Maybe it's time for that to change, who knows, but just a factoid. ISM non-manufacturing index came out yesterday. That was a beat. And any read above 50 is a sign of expansion. We beat by spot 5%, so a beat's a beat. And we see the non-manufacturing sector still in expansion mode. The market services PMI, the PMI report, something that we've been referencing. There are multiple PMI reports out there, Chicago PMI, Global PMI. The PMI, again, any read above 50 is a sign of expansion. I don't know what the expectation was, but the result for January beat the result for December. That's good. So you saw equities move up higher. You saw yields. I want to bring up yields on a weekly basis. Yields are just surging on a week over week basis. This is very bullish. This is the 10-year yield taking out the highs of last week. We have 2 trading days left to go. Do we close here? Do we give it back? Who knows? Just an observation. But historically, these rates are still very, very low, allowing for the market to continue higher. I think that a 2% handle on the 10-year yield is going to cause trouble for equities. Let's go to the pre-market action. And then we'll take a look at some chart requests. All right, gold is gaining steam here. This is a 30-minute chart. I was drilling down earlier to see how long it took gold to go from negative, because it was negative not too long ago, only an hour or so ago, and now it is up over a 0.25 percentage point. So that's pretty cool. The question is, do we hold it? Do we open up strong? And keep in mind, folks, these observations are not an observation of how I believe the day will go. It's just an observation of how I believe we're going to open up and how one might want to position their portfolio at the open, not how I believe the markets are going to close. I'm still skeptical about gold and its ability to hold these gains given the daily chart. Remember, all we're looking at right now are at current, the 30-minute chart. Generally in the pre-markets, we're looking at the 4-hour chart. The 4-hour chart is far more indicative of how we might close. But the 30-minute chart at current is looking pretty good, and certainly implies that at the open, we're going to have a strong open here for gold. Whereas with palladium, which I predicted would rally earlier in the week, it did, and it has since rolled over. We have a head and shoulders setup here, left shoulder, head, right shoulder, and we have broken the neckline on palladium. Trying to make a comeback here, but it's not looking good for palladium. And the question was posed to me, do I think that we're breaking out on palladium to new higher highs. My response was the test is always at the top. Here was the high back on the 23rd of January. And here's our lower high. Let's clean this up. Here's our lower high. Now, the rally is still intact until such time, this is a 4-hour chart now, until such time as we break this support level here. You don't want to see this support level broken. You know, and it's funny, you know, back here, all the headlines were saying is that palladium, there's a shortage, you know, the headlines just get the markets ramped up. Speculators go rushing in, buying hand over fist. They don't care about the price. They care about the headlines. The algos especially care about the headlines. And here we are now. Momentum's dropping off. Doesn't mean it's dead. It just means be very, very careful here that this may have been all about a bunch of hype for palladium. Forget I'm not even going to do that. So we're in a trading range here. The low being 21.5 on spot. Let's go to the dollar. The dollar is going to correct fairly soon. And it's already, this is a 4-hour chart. I think it's already begun. We're beginning to top out here. And what I want to point out is that on a historic basis, and this is probably why we're seeing gold catch a bid. Take a look at RSI, which is now rolling over on the dollar 4-hour basis. If you go back traditionally over the past, I don't know, 6 months or so, you get a pretty nasty sell-off on the dollar after we get RSI above 75. You saw it here. You saw it, where were we here? Around 70. Certainly here, back in September, nasty sell-off. Here in, July. So I think that we're going to get a pretty significant sell-off here. Short term, I'm not predicting a crash yet anyway on the dollar. So here is our upper band of resistance, because for our gold mining play, for our silver play, especially our gold mining play, we want to see a break in the dollar. Doesn't matter much if we have geopolitical risk, if the dollar rallies, but there's not much in terms of geopolitical risk. Coronavirus is certainly dying down some. That's already extended right. So looking for a break here. And let's take a look at bonds. Hey Patrick, good morning. How's your daughter and grandson? Is he arrived yet? Hopefully. Let's take a look at bonds. Bonds certainly have an influence on our positions. We'll go to the 10-year. This is the 10-year note, not the yield. And we have an outside reverse. No, this is not enough. This is an inside reversal bar. But good enough for government work. we have confirmed the reversal bar here by breaking out. This bar just opened up at 5 a.m. A lot of time to go here between now and 9 a.m. Eastern Standard Time to see whether or not this breakout above resistance is for real. So again, this commentary right now is just indicative of how we might open, not how we'll close out the day. We'd like to see higher highs on bond prices because that'll mean everything great. Congratulations. Congratulations. Good to hear. Give my best to all, please. Name me, please. Good for you. Patrick is one of our members, and his daughter just had, after a long labor, the poor woman, just had a new grandson. So congratulations, Patrick. Good stuff. Great way to start off the day. All right, so we're watching bond prices here. Let's see whether or not we hold these gains this morning. And have no doubt, this is influencing gold prices at current. Let's take a look at number 6. God bless you. God bless you. That's great. Let's take a look at nat gas, which we are certainly interested now. We are speculating long now in nat gas. All right, so we are putting in higher lows here on nat gas. We did break out last night, but we gave it up. And this would be called a breakout point failure. So we'll be looking to add more to our position, but we need to see strength. We will not buy weakness. So nat gas looking interesting. And what I want to do here, I want to set up an alert. Let's do this. I want to see if we break out to new daily highs on nat gas, and then we'll revisit it. Right now, I don't want to add any more to our positions until we begin to see strength here. And you need to manage your positions. If they're not working for you, then get out. We're in the early stages of a potential recovery, not a guaranteed recovery here on nat gas. And I looked at oil earlier, and oil on light sweet was not looking good. I mean, we broke out yesterday, did a retest, and we're pulling back this morning. We're still up, but we need to see whether or not this support level here is going to hold. So oil is looking interesting, but I wouldn't be a buyer here because we are pulling back off the highs and we're just consolidating. We had a brutal sell-off, and we're looking at the energy sector as a whole to possibly get long up, but we need to see a consolidation, higher lows, a little bit more of a base get built here, and then we'll consider opening up a long position because they have been beaten down quite a bit. Let's go to the stock market futures. We'll begin with the NASDAQ. Spiking the NASDAQ up yet again. This is not going to end well. right, so we had broken out yet again on the 5th, and we are at current back down below the support level. So I'd be very, very careful here in adding to stocks. I would not chase this market, man. I want to get rid of this. Clear. There we go. And I want to add this. I want to see whether or not we break out to new higher day over day highs. Again, as I always say, the test is always at the top. Do we break out or do we break down? Here is our trading range. At current, we're seeing a bit of weakness, despite the fact we're up over a third of a percentage point. It's all about the price action. You know, we could be up, but if we can't hold support levels, that's an early indicator that we may have a sign of trouble out there. And we'll be watching for an initial breakdown on RSI. We're not seeing it yet. But we will be looking to lean into the short side of this market. All right, there we go. So the open, we're probably going to open up fairly strong. How do we close? I have no idea. With the way they've been gapping this market up higher, they're setting everyone up for a really nasty sell-off. So that is the NASDAQ. Let's go to the Russell 2000, which had a huge breakout yesterday. It's up this morning, not as much as the NASDAQ. What a run. So we'll be watching for a potential break here. And it may not be today. This is not evenly drawn, but I think you get the idea of what we're looking for here. We're looking for resistance levels. As a matter of fact, this is way off. Let's get rid of this. That's better. So in short, using probabilities, the probability of us continuing higher if we close above this resistance level is very good. And who am I to short it? But if we begin to see breakdowns on intraday support levels, then we'll look to the short side, especially if we look to close out the day negative after opening up positive. That would be a bearish reversal bar, and then we look to the short side. Not aggressively, just building a position. All right, let's take a look at Patrick. IBM was strong. We'll bring up a chart of that. I didn't talk about Tesla yet, Patrick. I will, though. Definitely will. As a matter of fact, let's see if there's anything going on in the pre-markets with both of your names. We'll take a look at them. Wow. I didn't even look at IBM yesterday. Holding gains, that's for sure. A bit overbought here on RSI. We're near 80 on a 4-hour basis. Tesla. We should get a bounce here on Tesla. Slight one, not much. I don't usually go back to the well twice on these shorts. So if we bounce, I'm not looking to reshort it. We took advantage of a very inefficient pricing of Tesla. I mean, it was just a technical basket case. So we booked our profits yesterday morning. We were using the 900 put options, and we did very, very well with that trade. But I'm not looking to go back to the well here because our edge is gone. And what I mean by that is that if I'm going to be net long of a put option or a call option, I better have an edge over other traders. And our edge was that you had a lot of hot money chasing the shares of Tesla to a point where the technicals, let's go to a daily chart. The technicals were ridiculous. First, go to a weekly view. We still, on a weekly basis, have RSI 91.36. It's crazy. We are still on that really. We're at the third standard deviation Bollinger Band. This was nuts. This was nuts. You couldn't not short this. Daily chart. If they do rally it, excuse me. Sorry, folks. If they do rally it and they flirt with recent highs, I would entertain reshorting it based upon the weekly chart and how overbought it remains. But I wouldn't buy it here. I think that we are going to bounce. Perhaps not today, at some point in time in the future. Not perhaps, in all probability, we will. Because you're going to have the buy to the dip crowd out there. They're not paying attention to this chart because they have no idea that the weekly chart exists. All they care about is the story that they're being fed. And this is not going to end well. So one way to play this, excuse me, I'm really sorry. Definitely coming down with something. One way to play this is to open up a put spread going way out of the money. Because you could get a really, this is very speculative though, get a really significant sell-off after we rallied back, fail to take out recent highs, and then roll over on that rally back, open up a put spread going deep out of the money, and speculate that you'll probably get a fairly nasty sell-off. So that's one option here for us. Let's take a look at the intraday charts. Hey, Chris, good morning. Volkswagen like short squeeze. I haven't even looked at VW. I don't think I've ever pulled up Volkswagen in my life. Hopefully this is the right chart. Would Volkswagen be trading on the pin sheets? Oh, I see. I see a few years ago. Okay. Is this the right symbol, Chris? Oh, back here. Yeah. I see what you're talking about. Yeah, this did not end well. Very, very similar. Yeah, good point. Very, very similar to Tesla. Okay. Gotcha. Okay. I've never pulled up a chart of Volkswagen. Yeah, agreed. You know, we did have a similar situation back here in March of 2007 where it did back off, consolidate. So it's definitely not a guaranteed profit trade to short Tesla longer term, but you know, it's worth. Look at this. If you would have shorted deep out of the money puts on Volkswagen, if they had them, you would have made a lot of money. So very low upfront capital for potentially high returns. But again, it's not an investment, it's speculation purely. Let's take a look at Tesla intraday. You have some resistance at the 757 mark. I'm not going to be the least bit surprised to see a brief rally here, then a rollover, and a filling of one of these gaps or both. And then we get a big move back up. And then the question becomes, do we break out or do we break down? So the easy money to the short side has definitely been made here. Now the real work needs to get done, and that is, if you want to short it, waiting for support to get hit, watch for that rally back, and look to see if and when we begin to roll over and then lean into the short side. Keeping in mind, not so much the daily chart anymore, but that weekly chart is very, very overbought. Still, even after this big sell-off, it's still overbought. All right, let's go to IBM for Patrick. Whoa. Yeah, it looks like we're setting up for a pullback here, Pat. Volume is still very good. MACD histogram still looks good. It's just want to validate it on a separate chart. Yeah, we're pretty overbought here. We're trading above. We closed out the day yesterday above the third standard deviation Bollinger Band, and that is like kryptonite to me. And I'd be looking to at least scalp a short on IBM fairly soon. I wouldn't do it necessarily at the open. You could easily just trade sideways, alleviating the overbought condition, and then resume the upward move. So simply because we're above the third standard deviation Bollinger Band doesn't mean that you want to go shorting aggressively, but it does mean, you know, start looking to either A, raise stops, or use a trailing stop loss order, let the market take you out, and look to the short side, or put on a hedge on your existing position. Strong close yesterday using the raindrop charts. A very strong close. The right side of this candlestick, this is a VWAP and candlestick mix, raindrop charting. And the right side represents the afternoon price and volume action. And I call this like a pregnant formation. So we closed at the highs of the day with a lot of volume loaded into the back half of the day. Very, very bullish stuff. You saw it here, saw it here, not so much here, but this is a good day anyway. Very nice move, but it's definitely time to start ringing the bell here on IBM. Let's take a look at a 4-hour chart. Yeah. I would look to raise stops here and possibly short it. In the coming couple of weeks, you know what, on a weekly basis, we're above the third standard deviation Bollinger Band as well. Very overbought. I'd be looking to book profits, look to get back in on a retest of this breakout point here. I think we're going to get that. And that's at 146, around there. Take a look at Patrick. Yeah, I think he's talking about what happened. Okay. Woulda, shoulda, coulda, Pat, right? Chris is in Seattle. Hey. Man, you're really up early then, Chris, huh? God bless you. Okay, let's take a look at some chart requests. GDX. Bring up my annotated view. You know, initially looking at this chart, you take a look at this cup. I wouldn't call this a handle because it's pretty sloppy. But we have been building the right side of a base. We're now pulling back. I hate the Stokes here. RSI rounding top down below 50, not loving it. And this is why I question whether or not gold, the rally in gold this morning, is going to hold up. You know, if we get a negative print tomorrow or a disappointing print tomorrow on the government jobs data, then I think that you'll probably see a pop in the gold miners. Will they be salvaged? Probably not, but it'll give us the opportunity to sell some covered calls on our gold mining position and at least hedge up a little bit and generate some cash flow as we weather this storm. But I'm not loving the chart here. You know, I'm long with the gold miners. I'd love to say buy hand over fist, but we can't do that. You know, we're not going to talk our book here. So I still like this. This I hate. That was a failed breakout. And this needs to hold the lows of the week. And with the stochastics looking the way they do, you know, I don't necessarily trade off of them, but they are an indicator of what may come. And I think that we could easily come back down and retest that 2777 mark, despite the fact that gold is spiking up. Because one thing that we know is that when you have your Stokes that are declining, rallies tend to fade. You know, hopefully I'm wrong. I want to be wrong. Up volume was very light yesterday. You saw selling on strength, not good. I would not go adding to the GDX or the NUGT, whatever you're trading in the gold mining sector as of yet. It's not time. You'll probably get better prices. So I would avoid right now. Very neutral. Alphabet, Google. You know, they reported earnings the other day, and my cursory review of the headlines didn't warrant this sell-off in Google like we saw. And I think the opinion was borne out in yesterday's price action, despite the fact we closed off the highs of the day. Google missed on revenues, not by a wide margin. So the play here on Google, I would not go buying the shares. Not yet anyway. I think we need to see more consolidation and a breakout above this upper band of resistance. And then I would entertain, assuming that the markets are holding up, let's go to Trend Spider. Here's a weekly view. We have resistance immediately above. Let's overlay monthly resistance and support, to be fair. We're bouncing between monthly support and dashed line. This is a weekly chart, but we've overlaid weekly support levels. And here you have it. We bounced off of those levels this week. The problem is you have weekly resistance above. Let's go to a daily chart. We're just shy of daily resistance. I think we need to see more consolidation here on Google. I wouldn't be a buyer. If you're going to buy, you need to use a stop right below the support level here at 1423 and get out. Because if this breaks both monthly support and daily support, we're coming down here in a heartbeat at 13.95 per share. I'm not loving the setup here. An early warning indicator that we may press higher is a rally through this resistance level. But keep in mind that we do have, on a weekly chart again, we have resistance above. So I think what will happen is if we break out above this resistance level in orange, this becomes our new upper band of resistance as we move up higher on any breakout. Check out a 4-hour chart. Nice consolidation here. Stokes is still very weak. RSI is still weak. We may be putting in a higher low here on RSI. I wouldn't be a buyer yet. And again, if you're going to buy, you got to use a stop right below the support level. So I'm neutral at current on Google. Now, if the markets didn't rally so far, so fast, I would be a little bit more optimistic about Google, but I can't. I think that there's going to be a floodgate of selling that opens up in the next couple of trading days. And companies that missed on revenues are not going to be spared. Facebook. We have a monthly breakout above resistance. We're holding it at current. If we fail to hold the support level, brother, look out below. Weekly chart. Let's overlay monthly resistance and support. All right, so here's your monthly support level I just showed on a monthly chart, but now I'm showing it on a weekly chart. This must hold. I can't buy these shares because right above I have weekly support. Weekly resistance. Daily chart. We sold off the highs of the day yesterday. We now have weekly resistance overlaid on a daily chart. And we ran right into weekly resistance and we sold off. I can't buy these shares. Four-hour chart. A lot of overhead supply here. A lot of resistance above. I would have to say avoid at current. I don't like the setup. Too much risk, not enough reward. On a 2-hour chart, we have a potential head and shoulders setup. Left shoulder, head, right shoulder. Here's your neckline at 208.70. If we break that, we're probably coming down here to support at 201. Next chart up, Shopify. All right, so Shopify has a very high implied volatility rank, meaning that the options are rich. And when I see that, I look to see what the directional play will be, because we're looking to sell premium, generate income, cash flow on a trade like this. So we certainly want to go high level with a monthly chart first. You can see that we flashed topping action last month. We do have a new monthly high this month, but we're selling off the highs of the month. We have on RSI the potential for a negative divergence. Weekly view. Lots of topping action here. Okay. So I'd be looking to probably sell a call spread, meaning sell a deep out of the money call option, and to sell another call which would set up a credit to our account and help finance our naked. Now, it wouldn't be a naked call position. It would be somewhat defined risk trade, and look to generate cash flow by selling calls and taking advantage of a very high IV rank. What's with this chart here? All right, that's better. And ideally, we open up that spread into a rally. And I think we're going to get that. I wouldn't open it up right now. We're too close to a support level. I want to see a rally and let that IV rank increase a bit further, and then look to open up the trade. We had a breakout point failure on RSI. So we're seeing a little bit of weakness here. Intraday on Shopify. That doesn't mean we can't pop up higher. So again, I would want to open up that trade on strength. 2-hour chart. Flirting with a breakout here on a 2-hour basis. Not quite yet though. So Shopify looking interesting. But we have a lot of support below. So again, I want to see another rally here and look to take advantage of that increase in implied volatility, sell premium, and look to collect the credit between the call options. And that is probably going to be it this morning. Let's go back to gold. It's up again, huh? Up further? Tesla breaking down here. Looks like we're going to go another leg down. Right at resistance now, Pat. Let's see what bonds and the dollar are doing, and then we'll call it a morning. The dollar's holding in there. I still think it's going to break, though. We still have RSI above 70. Historically pretty high for the dollar on a 4-hour basis. Let's check out bonds. Bonds continuing to rally. This is what's fueling the rally in gold this morning. You have a little bit of weakness in the dollar, and you have some money rotating into bonds. See what the Nasdaq's doing. See whether or not we're getting money coming out of stocks and finding a home in bonds using Nasdaq 100. Yeah, here's that breakout point failure. If we break support on 9403 on spot E-mini Nasdaq 100 futures, you're going to probably see treasuries begin to, or not begin to, they already begun, continue to rally and probably see a breakout on gold. The question is, do we close strong on the day? That's a big question. And yeah, the 4 hours definitely looking good, Pat, no doubt. With that, folks, I'm going to call it a morning. Thank you for joining in. If you could smash that like button, I'd really appreciate it. Everybody have a profitable trading day, and I'll talk to you soon. Be well.